News Radio 700 WLW.
Back with Eddie and Rocky. And Rock, we're talking day trading.
Yes, and I guess some new day trading rules have been relaxed, so a lot more people partaking in it and maybe even partaking in some more riskier things when it comes to trading.
Well, we usually talk to our good friend, Jay Ratliff, who's heavily involved in that.
Yes.
But we're getting a different perspective. He is our buddy. He is financial strategist. He's the president of Cotton Wealth Management Associates. He is our good friend, Steve Cotton. Steve, welcome back.
Well, good morning and good afternoon. It's nice to be with you guys.
So, Steve, you heard us talking there. Explain, Rock just brought it up, they've relaxed the rules on day trading. Explain what that means.
Well, basically, they've had in place for since 2008. Remember the last financial meltdown and where people lost a lot of money suddenly. They passed a rule, the SEC passed a rule that qualified you as a pattern day trader if you were like trading the same four stocks within a 5-day period. A lot of the smaller brokerage firms lobbied the SEC to do away with that, saying that it really needed to be, instead of, you're being a day trader only if you had $25,000 in an account, they've now lowered that to $2,000, and the broker-dealer firms have lobbied that you ought to do away with the rule and make it more of a risk-based requirement. And that's complex, but basically means that they recommended you do it in a way that people have to meet certain margin requirements, so that if the stocks went south all of a sudden and they had borrowed money from the broker to finance that trade, then they had to pay that money back. I think the rule is yet to be seen whether this will be positive or negative, but it concerns me anytime you lower the threshold and make it easier for smaller investors to do day trading. As a professional financial advisor, I generally recommend against frequent day trading because only people that do it all the time and have a lot of money get very good at it. Most people tend to lose money doing that.
And why is that in your experience?
Well, because they typically trade on feelings or current events or current market conditions. And when your perspective is so completely short term, you tend to make trades at the wrong time for the wrong reasons at the wrong time. The way people really build wealth in the stock market is by long-term strategies, buying good investments and holding on to them for the most part through ups and downs and adding money on the downs. And that's the way Warren Buffett and other people got wealthy, is by being smart about stock trading, not impulsive.
And to that point, though, Steve, you think that lowering this threshold is going to lure a lot more people who actually don't know what they're doing? Yeah. Well, hell, I got a couple of grand. I'll throw my hat in the ring here. I might turn that into 20. Well, do you think that's going to happen? And I think that's what the fear is.
Yes, I think there is some legitimate concern about that, and I think the group driving this are the smaller brokers that stand to make money with people trading, and I think it's greed that's driving this rule change. The SEC is trying to be wise about it, but if you'll remember, these rules were put in place after 2008, the last financial crash that was really harsh, and they were put in place for good reason. Now, I agree with a focus more on margin risk as opposed to just arbitrary account size, but I am not in favor of any change that makes it easier for the small investor to lose money, and I think that's what this does.
Steve Cotton is our guest, and Steve, reading a lot about folks using AI to play the stock market. Explain how that works.
Well, AI can do a lot of things, and we're just at the very onset of seeing what all AI can help us with. We'll see what the AI patterns are. There's, I think, one company that's exploring that now. I think people ought to be very cautious about that. because trading and investing in the markets ought to be on the basis of either good financial advice from a professional or on the basis of a great deal of research and thought and strategy on the part of the investor. And for people that are very busy and they don't have time to do a lot of research, working with a licensed professional is the next best thing. AI is going to be a trading mechanism that will trade on the basis of algorithms and patterns and requirements that you put in, but it's not going to be foolproof. And I just think any kind of trading system that takes out of the equation thoughtfulness and research is not necessarily helpful.
Steve Kahn's our guest, and Steve, our friend who we were talking about as we came to you, and he does actually give lessons, for lack of a better way to put it. He teaches how to properly day trade. And as you pointed out, there is an art to it. There's knowledge that needs to be
discipline to it.
Discipline, and Rocky and I were saying that, and he always yells at us for saying Rocky and I are big gamblers, or used to be until we learned our lesson. But we were saying, I think what you're saying is that there are a lot of people who are not risk averse. And they don't think about the possibilities. They have a few extra bucks. So instead of going to the casino or going to the track or whatever, they go, well, hell, I got, my Uncle Ned told me that he got a good tip on a stock. I'll ride that sucker up a few $1,000s. I mean, I think that's what we're talking about here, isn't it?
Well, there's an old joke in this industry. You know how to make $1 million in the stock market? Start with $2.5 million. And I think day trading, there are only a few people that can do that really well. And day traders are the kind of guys that they want to make a couple of dollars here, a couple of dollars there from sudden stock movements. And I don't know many people who have lives where they can just sit in front of the computer screen all day long and watch for stocks to tick up and down. That is certainly not how I want to spend my time. And that's most traders, most investors have a longer time horizon than just market ticks in the course of an intraday cycle. You can make money day trading, but you're going to lose a lot of money in the process of learning how to do it well. And most people just don't have the time or frankly the inclination to manage their money that way. They ought to be longer term and more strategic. You have better odds at Vegas sometimes. Whether AI will help us get more of an edge on that remains to be seen. It could potentially. But again, I just don't think there's a substitute for sitting down with a professional and saying, okay, this is my goal. This is where I want to go. I need an income strategy or a growth strategy or both. I got to take care of my mother and dad. They're getting older. There's no substitute for those kinds of thoughtful consultations in implementing a long-term investment strategy.
Steve Kahn is our guest. And Steve, what one area of the financial world that I don't understand, but I'm disciplined enough because I don't understand. I don't invest in it. I don't have any. That's crypto. But explain to us right now the day trading or the stock trading of crypto, what that entails.
Well, most cryptocurrencies are based on nothing substantive. Cryptocurrencies are a very exotic, very complex, poorly understood means of transmission. And I have urged my clients to stay out of crypto. Some people have made some short-term money in it, but day trading of crypto gets really exotic, and I am not in favor of investing in things that have no intrinsic value. Now, a cryptocurrency advocate would disagree with me on that, but the problem is cryptocurrencies are unregulated, and I keep my clients out of areas that are unregulated because that's the wild, wild west, and you can lose money much more quickly than you can make money in the crypto universe right now. Congress needs to regulate it, but the reason Congress hasn't regulated it yet is because Congress doesn't understand it.
Yeah.
All right. Well, real briefly, while we have you, Steve, your outlook here for the immediate future. Do anything on the horizon we should be aware of, or is it just all kind of hinging on Iran right now?
Well, I think the Iranian crisis and the surge and fallback on oil prices is market noise. Long term, this is going to get resolved sooner or later, one way or the other. I think it's going to take longer than sooner, because I think the IRGC, the Iranian Revolutionary Guard Corps, is not going to give up and go quietly. They are radicals. They are revolutionaries. They are Islamic Nazis. They are fanatics. And I think this thing is going to take a while to get resolved. But longer term, the things that drive the market, I'm cautiously bullish, because if you look at all of the things Trump has put in place, the tax cuts, no tax on tips, no tax on overtime, $18 trillion worth of new foreign investment that's coming in, some of the tariff strategies that have forced lowering of foreign tariffs on our goods. Everything he has done, for the most part, is setting the stage for a long-term growth in the stock market. So I am cautiously bullish, but I always say work with a professional who is licensed, who is a teacher and a strategist, not a trader. Work with someone that can match your goals with the best methodology, because I think the best years of the stock market are up ahead.
All right. Well, with that, Steve, we will let you go, buddy. People want to find out more about you. Where can they go?
My website is cottonwma.com, cotton, COTTONWMA.com. We have clients all over the country, but we are teachers and strategists. We're not day traders.
All right, Steve, we appreciate it, buddy. Thanks so much.
Thank you.
Thanks, Steve.